What's going on your screens at this point in time? The crude markets continue to fall. In fact, now below 30, back below 30, and that's impacting global equity markets as well. The US markets, as we pointed out, have opened very, very weak indeed. But the big breaking story at this hour, just days after taking charge of the commodity markets, the market regulator SEBI has cracked the whip on speculative trading. Fresh forward contracts have been banned along with a slew of other measures. Sajeeth joins us now with the details. Sajeeth, take us through the measures that have been announced by SEBI, and what is this likely to do? What will the implications be of this move?
This is a multi-pronged approach initiated by the regulator, commodity market regulator, now SEBI. And in this entire process, the purpose is to bring down speculation and volatility in the commodities market. It has been witnessed in the last 1 month that there has been a lot of volatility happening in some of the key pulses in agri-commodity market there, and the attempt is to calm down the market there. And as a result of which, there has been some curbs which have been put in place. The first being that the outstanding positions for members and clients have been halved to 25% from 50%. That will bring down a lot of cut down a lot of outstanding positions, and there will be a lot of unwinding that will happen as we speak. The second thing is the daily price limit, which has been imposed on agri commodities. That has been was set at 6%. Now it has been brought down to 4%. So that will also bring down some kind of volatility there in the price movement that we are seeing in the agri-commodity business there. But the bigger thing is the forward contracts. SEBI has banned fresh issuance of any forward contract going forward, and as a result of which, what SEBI is trying to do is trying to bring in some kind of processes and procedures into the forward contracts market there, because it is closely linked to the spot market, which is mandis, and also there has to be a lot of procedural issues which will be coming in. We have been
Hang in there. Let me bring in Kishore Narne, the Associate Director at Motilal Oswal, also joins us. Kishore, appreciate you joining us. Sajeeth has just been taking us through the implications of the measures that have been announced by the market regulator, banning forward contracts for the commodities market. What do you make of this, and what is this likely to do?
Good evening, Shireen. I think, banning forward contracts, I don't read too much as a curbing speculation, because the volumes are almost negligible in forward contracts, and the participants are also not very widely spread. There are very few contracts, and that doesn't really impact any kind of market volumes as of now. So I think what I see from these regulations is that probably the SEBI doesn't want to get into so smaller market segment where it doesn't want to go and invest and get a grip on that. So probably they don't want to get into something which is so small. So, and they want to get away with that and control the futures market in much better way, rather than allowing more and more segments which at this point of time. So I think reducing the daily price limit again, I think overall it doesn't add anything or remove anything from the now on the table, but I think they just want to curb overall price movement on a particular day, so that the overall on a day it doesn't move too much. At this point of time also we have this 4% daily price limits, and the only change is the slabs are being changed. So overall, as a participant, I don't see much of a radical change at this point of time. But certainly, the steps are welcome, and the suspension of forward segment doesn't really impact anything in the market at this point of time.
Okay, so you're saying essentially that this is not going to have any implication as far as the commodity markets are concerned.
Yeah, commodity derivatives is concerned, because the forward segment is less than even 1% of what is traded on the future.
Okay.
Kishore.
All right, Kishore. Yeah, sorry, Sajeeth, go ahead.
Yeah, Kishore, what impact will the reduction in position limits have? Because SEBI has halved the entire position limits from 50% to 25%. Will it lead to some unwinding of positions because of that?
Yes, certainly. I think that is the only thing which can happen. The near-month position limits will be revised from March contract onwards. So at this point of time, whatever is available, probably that will not change. So from March 2016 onwards, the new contracts, these new limits will be applicable as far as I read from the notification. And definitely one thing is that, we have to encourage corporates and large hedgers to come onto the platform and give the platform the real physical market alignment to the futures prices. the moment we reduce their participation, we come to de-align the futures and on the cash market of this. So probably I think rather than reducing the position limits, maybe enhancing the margins and enhancing the participation could have been better. But certainly they would have their own logic at this point of time, because on the opposite side, until unless there are large managed money or large institutions, the retail might not be able to take the risk of the large corporates. So probably that could be the logic behind this. So that could impact certainly the agricultural market volumes, which is already struggling right now.
But what is your sense of the speculation or the speculative activity which has been seen in the agri commodity basket? Do you think that these measures will be enough to stem that speculation and volatility which is there? Because we've seen quite a bit of volatility happening in the last couple of weeks, which has led to this kind of curves coming in.
See, Pradeep, finally, a speculator cannot take the market away from the fundamentals. So that one thing everybody, including the government and regulators, do understand that. One thing is that, for example, we have a major rally in pulses like Chana. That's the only pulse listed. There are other pulses which are unlisted, like black gram and the green gram. So all these unregulated, unlisted pulses, especially Tur also, had a major rally.
Kishore, thanks very much for giving us your comments on this. But as we reported, and that is the big breaking story at this point in time, we've now